Transaction Capital has released its results for the year ended 30 September 2019, showing that headline earnings are up 18% to 803 million rand. Their CEO, David Hurwitz, joins me live from the JSE. Thanks so much for your time on Point this afternoon. What would you say are the main drivers of growth, considering we've had a particularly difficult economic climate to operate in?
Hi, thanks for having me on the show. Yes, we're very pleased with the results. Both of our businesses performing very well. In SA Taxi, our earnings grew by 21%, so our attributable share of earnings, so we're very, very happy with that result. And in our other division, TCRS, their earnings grew by 15%. So both businesses growing in, solid double figures. In SA Taxi, we've really seen growth across all the different verticals. Our more established verticals of the finance of taxis and the insurance of taxis have grown nicely. Our finance book grew by 16%. In our insurance business, gross loans and gross written premium grew by 20%. So both of those verticals grew nicely. And some of the newer initiatives of our dealership initiative of selling vehicles, both new and pre-owned, selling parts, also both new and refurbished, have worked well together with our rewards programs, also adding to positive growth. So a very good result in our SA Taxi division. On the other side of our business, TCRS, what we're very, very happy with is our business in Australia, which we've now owned for about 3 years. That business is really performing well with our Australian strategy on track. We've acquired new customers, we have won new mandates, and we are also entering the acquisition of non-performing loans in Australia, which is a much bigger market than the market in South Africa. So very good performance in Australia. And finally, in this environment, we also buy non-performing loans from consumer-facing businesses, retailers, banks, specialist lenders, telcos, and that business also has grown very, very nicely this year.
So with that business essentially making money from collecting loans or collecting from distressed consumers, with the economy outlook not looking very good, that company is probably going to make more money from a situation that most people want to avoid.
So we really have a dual model in that business. We either operate as an agent, where we will collect debt and earn a fee on the successful collection of that debt, or what we will do is we'll buy the debt for an outright purchase price, so many cents in the rand, and anything we collect over that after our costs is then part of our profit. What we find that in a environment as we're in now, we are able to acquire debt for lower prices than we had in the past, but to still earn similar margins than we would in good times. However, from an agency collection perspective, it's very difficult to grow revenues in this environment. First of all, our clients being banks, retailers, specialist lenders don't really extend credit as freely as they normally do, so our market actually contracts. And then it's more expensive and more difficult to collect debt from a stressed consumer. So the dual model kind of works in tandem. It's defensive. In a positive environment, we do very well in our agency business, and in a negative environment, as we are in at the moment, we can still do nicely from acquiring the portfolios, but at a lower price.
Okay, so you said you have about 950 million rand in undeployed capital available. What do you use this for, and what are your plans for this? And then secondly, respond to that complaint about private business sitting on large sums of money, not investing back into South Africa, particularly at a time like this.
So yes, so we've got 950 million rands of undeployed capital. We have earmarked the majority of that for organic growth. The first thing that we want to do is I spoke about buying non-performing loan portfolios in South Africa. Last year we invested about 650 million rand into portfolios in our country, and this year we invested over R1 billion. We see a portion of our capital underpinning that initiative. We want to buy portfolios again in South Africa for at least R1 billion. So a good chunk of that capital will be deployed into buying NPL portfolios in South Africa. I've spoken about our Australian business, and based on the great performance that we've had over the last 3 years, together with our growing database and our very good progress in deployment of technology into our business there, we really feel that we can accelerate the acquisition of non-performing loans in Australia. This year we invested 122 million rand, and we believe we can invest more than that in the years to come. And finally, we see the opportunity in the fragmented end of the European market to start buying these portfolios there as well. Small investments. We invested about just over 2 million euros into the European market over the last 12 months, and we feel that we can continue doing that going forward as well. So there is investment, some into our South African operations, but also some into offshore operations.
David, I know you've touched on growth in both parts of the company, but going forward, where do you think the majority of that growth is going to come from, perhaps in models that you haven't spoken about during the course of this interview?
I mean, so normally over the last 5 years, if you look at our growth rates, TC has been able to grow earnings by about 20%. Over the recent years, SA Taxi has grown quicker than TCRS, which is the book buying and collection business. And I think looking forward, that will continue. Taxi will grow, our SA Taxi business will grow slightly quicker, and I think that will come from some of the new initiatives. So by way of example, we sell both new and pre-owned cars. We import parts very efficiently and procure parts very efficiently and retail that to the taxi industry. That's a new initiative where I think we'll see serious growth. And then our rewards programs, where we leverage together with Sintaka, our partners in our SA Taxi business, we leverage the buying power of the minibus taxi industry to get rebates and better pricing for minibus taxi operators, and that allows us to get both better quality consumables and parts into the minibus taxi industry, which will improve safety in that industry, but also at a better price. And we obviously participate in some of those benefits, and we see that as a nice growth initiative as well. So I think all around very exciting in both our SA Taxi business, in some of the newer verticals, as well as in our TCRS business.
David Hurwitz, CEO of Transaction Capital, thanks so much for your time on Point this afternoon.